The National Investor's motto is, you can get information anywhere, but here you get knowledge. And for well over 40 years now, Chris Temple has imparted that knowledge, an unparalleled, understandable, and useful take on the big picture of the markets and of our world. He has been out in front of what you see on the news every day on many themes. More, Chris has taken this macro knowledge and his unique analytical abilities to uncover unique investment opportunities. Often, he has guided his members to big winners in resources, biotech stocks, and more. His talents and connections often getting him into ground floor opportunities before they are discovered. Without further ado, here is Chris with today's topic.
Welcome in, folks. I'm Chris Temple, editor and publisher of the National Investor. I'm joined this morning, and we're doing this on July 18th, 2023. I'm joined by my old friend Des O'Kell. He is a senior vice president and director at the Alberta-based Enterprise Group. Des, good morning.
Good morning. Thanks for having me, Chris.
Well, an earlier morning for you today, too, because you're behind us here. So I had you going early this morning with emails and stuff like that. But anyway, you're going to learn a lot about Enterprise Group today. Their symbol on a Toronto Stock Exchange is simply the letter E. And on the OTCQB, where they listed earlier this year, it is ETOLF. You see that all on the screen here, along with their website address, etc., which I would encourage you to spend some time at later on, because this is one of these very best value propositions in an energy company, in my opinion, that you're going to find. Now, what I just said can be construed as a forward-looking statement. Des may make one or two that would qualify as that. So we're going to give you the obligatory notices of that right now, which you also see on the screen here. And likewise, our own, for the National Investor Publishing screen here, you'll see that, among other things, Enterprise Group has paid us to do some augmented media work and copywriting and stuff for them. And of course, we're going to do this video too and tell you a little bit more about the story. Now, the high-level view that I want to give quickly before I turn this over more so to Des, and Des and I talk about this regularly for years. We're always talking about the energy markets and some of the political idiocy, and every now and then even some good news, although those instances were few and far between for a long time. But bottom line is that Enterprise, under Des's leadership and that of Len Jarosek, who is the president and CEO of the company, this company managed to avoid the fate of a lot of others, especially in the Canadian oil patch and among service companies there, that weren't able to weather a multi-year bear market in Canada. They emerged leaner, better. They're growing the company again. You're going to find out a lot of just eye-popping financial metrics that the company's posted the last few quarters. But the reason why, in my view, you should be interested in Enterprise is that it's becoming ever more clear that old energy is not going away anytime soon. There's been a lack of investment. There's been a political imperative in some quarters against what are called fossil fuel companies. It's all been demonstrated ever more to be premature. And Des, you and I were talking before I hit the record button about just this morning, a piece of news that's out that puts an exclamation point on that. BlackRock, led by Larry Fink, a multi-trillion-dollar international conglomerate of infrastructure, engineering, energy, and whatnot, that was one of the leaders in browbeating others over all this ESG stuff, and it's claiming that they were going to be at the forefront. Guess who they just brought on as a new director? Amin Nasser, who is the CEO of Saudi Aramco. Now, Nasser will be stepping down to devote more of his time, but it just underscores what's going on in the world. And we're not going to take the time to get into this because I've talked about a lot of this. We want to talk about Enterprise, but I want to read you something that Nasser said a few months ago. And he's not alone in saying this. He was talking about, and this was at a meeting that JP Morgan put on earlier this year. He was talking about how destructive, potentially, the increased focus on all of this ESG stuff, which nobody conceptually disagrees with, but it became a cause unto itself, and it has stifled the development of everything, not just the battery metals we need for the green energy revolutions to the extent that we ever have one, but even our ongoing needs in a world where the demand every year for crude oil keeps setting new records. He said, we need to realize that today alternatives are not ready to shoulder a heavy load of the growing energy demand, and therefore we need to work in parallel until alternatives are ready. So it's dawning on most everybody that the oil and gas industries are here to stay. Yes, they need to be more efficient. Yes, they need to be more environmentally conscious, but these technologies and products are not going anywhere, in the lifetimes of any of us on this video or any of you listening. So just keep that in the back of your mind. So Des, you've been the senior vice president of Enterprise for a long time. We've known each other for, I'm sure, 10 or 12 years now, something like that, through good times and bad. We had some good times, then a lot of years of bad times in Canada, and now good times again. Give us a quick overview of how Enterprise managed to weather this storm to get to where you are today.
Yeah, well, thanks for that introduction. Len Drozik and I founded the company back in 2004. We were public within a year of that, and quickly graduated to the TSX in 2007. We've made some acquisitions across that the span of what is now almost 18 years. And we went through some pretty interesting times. If you remember, at the time we went public, 2004 and 2005, the start of Enterprise, we were in a market, an energy market that was really terrific. Both oil and gas prices were high. So every region of our Western Canadian basin was very active. Obviously, we have the oil sands, and we have terrific reserves in natural gas and gas liquids and what have you. So everything was beating on all cylinders during that time period. And of course, that 2008 crash where things went down, of course, it repaired itself fairly quickly. By 2010, 2011, things were better, no doubt, but we lost gas prices. Then natural gas prices really didn't come back. Oil prices were strong through that period. And of course, at the end of 2014, when the Saudis kind of stepped on the gas pedal and tried to overproduce and sort of crush the U.S. shale oil, revolution that was happening there, prices went down, and that was our 7-year downturn that didn't repair itself until 2000, right now about 2021.
Well, and the important thing to remember about that, and a lot of people I'm sure forgot that back then the Saudis had a different game plan, which was exactly as you said, to try and knock out a major competitor that had emerged with these shale producers, chiefly in the U.S. But that led to not only weak prices in the U.S., but incredibly weak in Canada. I mean, there were times that you pretty much couldn't even give away natural gas and some of the heavy oil.
Yeah, I mean, the gas situation was at some points for periods of a day would go negative. It was it was quite the interesting setting. Obviously, certain players in Canada had made different arrangements. They've like the Tourmalines of the world, which is Canada's largest natural gas producer today. They made some very prudent moves and started moving gas into parts of areas in the U.S. that had better markets at the time. But nevertheless, gas was measured, in cents for much of that period. Things are obviously a little bit different today. Commodity prices are what you'd say they're in a the Goldilocks kind of measure, if you want to say that. Our Canadian producers of gas and oil are kicking out tremendous cash flow. And let me explain that 7-year downturn that we experienced, that end of 2014 to 2021. If any of us were still in business after that period, what we all did to get through that period, both producers and services, is during that period, we really right-sized the business. all of the operations were tuned to be able to kick out positive cash flow on lower activity levels, lower pricing, the whole gamut. So when enterprise got to 2021, we really had a finely tuned instrument. And when you add higher activity levels with higher pricing, we finally, in the last couple of years, have been able to institute some price increases that basically diminished from the old period. So we're back to a point where we're doing more with less, with our operations being so finely tuned, and of course better activity. And I'm sure we're going to talk about it, but our recruitment offerings to our clients are bar none the best in class, and we're leading in some innovation there, and I'm sure we'll get to that as we move along.
Well, for sure. I mean, one of the slides on the screen here now I want to share with folks is this is kind of a who's who of the big players in Canada's energy sector that you do service work for in one manner or another. And to stress folks, Enterprise does not produce oil and gas by itself. It is a service company that has a lot of different tools that enable oil and gas companies, pipeline companies, and others to do what they need to do. And we're going to take a quick lap through them now. In fact, as I want to save the newest story and the most interesting one being evolution for the end. But give us a quick lap through your other divisions and exactly what they do for your oil and gas and industrial customers.
Yeah. So we have 4 subsidiaries, and some of them are regional, and some of them are simply particular classes of equipment that we offer. So I want everybody to understand that the equipment that we're bringing out to site. So we're providing what is called site infrastructure. So when the producers are out there, they're drilling, they're completing and fracking, they're doing their flowbacks at site, they're building plants in the area. And everybody, would benefit to know that, most of this activity is in the frontier of Canada. It's not in populated areas. It's not like the San Joaquin Valley in California, where there's tracks between homes and what have you. This is very frontier. We live in an area of the globe that has about 7 months of Arctic weather. So, we've got some extremes here. So the site of infrastructure equipment that we bring out to these project sites are things like mobile office buildings, the medic buildings, the washrooms and wash cars. So there's a tremendous amount of mobile structures that are on these sites that we're moving around. We bring the lighting, the power systems that power the entire site. Is brought on by us. And of course, in the power system case, it needs to be mobile, it needs to be robust. And of course, other things like the scaffolding around the wellheads and so forth when they're getting. And of course, in the winter, we enclose those scaffolding structures so they're actually protected from the elements. We have a flameless heating company that is one of very few. It's very, very unique type of heat. And we're using some of that heat to get into, of course, those enclosed structures. So when it's minus 30 centigrade out there, these guys can work fairly comfortably inside around those wellheads. So we bring this very unique, site infrastructure equipment to site. It allows everybody there to stay in contact because we have communication towers that we bring out to the area as well. They're staying in contact with their headquarters, and of course, operating 24/7 in very remote and of course extreme conditions.
Let me inject something there, Des, on that particular service, because you guys put out some news not terribly long ago about one of the pieces of business that you've gotten, and that was actually with this heating company that you have to make sure that you could heat up sections of pipeline in this frigid weather that is being laid as we speak to eventually lead to the first major West Coast LNG export facility in Canada's history. This is what, a 30-some billion dollar project overall?
Yeah, I think it's actually more around 40 billion. So
well,
it's
with inflation, yeah, I'm sure.
But I believe it's Canada's largest single project in dollar value. Yeah.
Yeah.
So it's a big one. And like you said, it's going to be Canada's first entry into the global LNG market. There's a couple of smaller ones that are following in behind. But, around the time you and I were talking, 10, 12 years ago, it's interesting. There was about 18 projects that were looking to get permitted, and many of them did get permitted. But eventually some of the, by the time 2015 rolled around and we've got a new federal government, many of those players for all sorts of reasons took a bow and got out of that. So there was about $150 billion worth of projects in the LNG space that got canceled in the mid 2015-18 era. So we're very lucky that the Shell Canada, this LNG Canada is their project. They have 4 other partners, but it is looking to liquefy gas, I believe, early in 2025. So we're getting close to the construction end.
And that pipeline is going to take gas pretty much from your neighborhood, where your headquarters is, in the northern parts of Alberta. And in that area, pipe it through those pipes that you're helping to prepare for, and then go out to the Pacific coast. And is that in Kitimat?
That's correct. The end point where they'll do the liquefaction is or liquefaction is Kitimat. The feedstock gas that is going to fill this particular system is northeastern Alberta and northeastern BC and northwestern Alberta. That whole Duvernay, Montney regions that you may hear about. Anybody that's familiar with a few of the big reservoirs up here, that's going to be the feedstock. And of course, much of our locations are up that Rocky Mountain foothills region, which is where those big Duvernay, Montney plays are. So all our clients are in those particular regions.
Gotcha. Now, of all the different divisions that you have now, the newest and by far the most interesting one is Evolution, and that's something that you acquired. That was it from another player?
Yeah, there was a small player that was really championing the natural gas turbine technology that we were working with one of our leading clients on some projects 4 years ago. And this little small operation had a couple of very big clients, just a couple though, and they were big names, and they were basically developing the natural gas turbine, small microgrid where, basically getting away from all diesel on site. Because if you're looking at these sites, they might be 4 to 6, 8 acres in size. You need a lot of lighting. In for half the year up this way, it's dark for most of the day. So these lights are on 24/7. They never shut off. So every light plant, and you might need anywhere from 6 to a dozen of these to light up a particular site, all have a little diesel generator at the bottom of the light tower, right? And of course, then you need larger generators to power the office buildings and the medic buildings and the washrooms and everything. So you do have to travel with mobile power systems to these sites. And anywhere from 10 to 20 diesel generators are on any particular site. So not only do you have a lot of these units that we're needing to that are consuming diesel, a site would consume about 3,000 to 6,000 liters of fuel a day. At almost $2 a liter, you can see that's a fairly hefty expense to the client. Not only that, noise levels are up with that many units going, and of course, the other part of the issue is the emissions that are kicked out by these 24/7 running diesel generators. So. What this small group was doing is they were not using any diesel. They were bringing on one larger natural gas fired unit that was a gas turbine. And then they would use a porting and cabling above ground to go around the perimeter, and everything plugs in. All of the office buildings, the lighting, everything plugs into this microgrid. We were doing a pilot project with one of our larger clients along the same lines. And of course, we felt this is the future, because in 80% of the cases, we're actually utilizing the client's natural gas that's on site or produced nearby. Now, when you got a daily fuel bill of 3,000 liters at $2, that's $6,000 plus a day that completely goes away, and that check to the fuel distributor to bring it out 2-3 hours up the highway every couple of days is absolutely removed. And further than that, of course, the fueling, you know what, when a nozzle goes in, it comes out, there's little drips and drabs, and that's eliminated. And of course, in the end, the emissions reductions. When you move from diesel to natural gas, there's a well over 30% reduction in CO2 emissions, and between 75 and 99% reductions in things like NOx, SO2, and particulate matter. So when we're looking for we here in Canada, we have legislation where these large emitters are tied to some very, very stringent reporting and staying under a threshold of emissions. So not only do they have to track and report their emissions, they have to stay under a certain threshold. If they're under the threshold, they are credited with carbon credits that show up on their balance sheet. If they're over that threshold, they're financially penalized. So there's some legislation here that is in place where these larger emitters need to not only track, but reduce their emissions. We're helping them with that.
Very cool. So you're helping them avoid any penalties from emitting too much carbon. You've knocked noise down. You've knocked the cost down. I mean, what's not to like about this? I would imagine you've got quite a few customers now that are using this system.
Yeah, the adoption rate certainly of the clients that are under this new legislation for reporting and emissions reductions and what have you. And as you know how these governments work, that threshold every year or every period, that threshold will just come down, and all of a sudden now you've got the small producers will be under this particular reporting scheme and what have you. But right now it is the large emitters. And so it's fairly easy to adopt the large emitters because of how we're helping them. And it's important to note that the moment we've got a first mover advantage. There's none of our competitors or peers have been able to retool their power fleet like we have over the last 4 years. And, that's because we had been financially nimble enough, even prior to the upturn in our sector, we were retooling and offering this equipment, set of equipment assets to the client. So adoption from the big guys that are already our clients and new clients coming in because of our offerings are really helping the company move forward.
Well, and folks, I want to add a kind of an editorial note to this too that really underscores why I've liked Enterprise so much for so long. This company has always attempted to find accretive acquisitions or ways to serve the energy industry, in some cases, civil engineering and other industrial companies, not always just energy, but better than anybody else. And over the years, they've added companies, they sold off a couple that they were able to make a profit on. A couple of times, they made nice profits on selling some companies. But this evolution is the latest example of how you really made an accretive purchase. It's put you on a map. And I think it's done a lot too, Des, to bolster, Enterprise's own ESG bona fides when people, and again, some of this stuff, as we said at the outset, is overstated. But look, we do need to be more cognizant of the environment. And I'm sure if I was a worker at one of these places, I would be happy not to be smelling diesel fumes and hearing umpteen motors going when I'm trying to sleep at night as well.
Mm-hmm. Yeah, there's no doubt. You're right. I mean, everything that we're doing obviously is for the benefit of the client. But certainly we're operating our business under, very similar themes as well. The nice thing about our business is, unlike, drilling and fracking and what have you, we're our intensity of employees, very few employees are needed for what we do. It's all the equipment assets. Obviously, we have field techs. Once we mobilize the equipment out to site, it's there for anywhere from 5 weeks to 5 months type thing. All we're doing is going to site with our field techs, making sure all our equipment is operating as needed and so forth. And of course, what helps our margins is that that field tech running out the site to do something is our cost. The amount of calls that we need to do at site with the natural gas powered systems is much less, or just way less running parts and moving things and what have you. And the reliability of a natural gas turbine is rock solid. I mean, it can go for several months on site before it needs to be shut down for a maintenance routine maintenance service and so forth. So our attention to site has dropped, which helps our margins as well. So the overall move to diesel transition to natural gas has been extremely positive for obviously our clients and our operations as well.
Well, and that segues into a couple of the last things that I want to close this overview with. And folks, quickly as a reminder here again on the screen, make sure that you visit Enterprise Group's website, follow them on Twitter, sign up for their mailing list. This, as we're about to underscore, is a great story of an energy service company up in Canada that's got a lot of wind at its back after fighting headwinds for so many years. And on that score, Des, the turnaround that you guys have had operationally in the last several quarters now has been nothing short of staggering. Folks, you'll see these press releases on Enterprise's website when you go there. I'm running through just a couple of the highlights right now of recent quarters, but you guys have gone from wondering at various times how easy it was going to be to keep the doors open in the lean years to now you've got revenues. I mean, every metric is soaring as far as your revenue levels, your free cash flow, bottom line net earnings. That all has enabled you to continue to buy back shares and have a very low share count of and on that share count too, as we talk about that, there's you and Len and the other management are, I think, what, 40% plus holders now.
Yes, it's over 40% now. Yeah. So we're aggressive at increasing our shareholdership. I mean, we're trading just over half of our net equity value. So we see this as a deep discount, and we're continuous buyers of the shares. And of course, our NCIB, our normal course issuer bid, we're renewing it next month. So we're going to continue with the fairly aggressive plan of buying back shares as well.
And that, of course, a lot of energy companies are doing that because they're not growing. That's been one of the reasons why globally you've seen a lot of the major integrated energy plays are not putting as much money into the ground or giving it back in dividends or buying back shares and so forth, because there's been a lot of disincentives for them to increase production. And as we said there again at the outset, that's probably going to change again somewhat as the reality sets in that we need that money to go into the ground more so. But in your own case, you're buying back shares simply because you've got that much cash coming in. You're able to benefit yourselves and the other shareholders by doing that. And it's not because you're not growing, it's because you are growing and doing so much better.
Yeah. And to your point about just the like I said, about 2 years ago is when we had the start of our energy economy here in Canada taking back into a positive. Like our revenues quarter to quarter, comparative to the previous year, have been in the 20 to 30+% increases. But more than that, and what we're quite proud of is we've been able to increase our margins as we've been going through as well. And I know our Q1 is one of the strongest on the calendar, but 51% gross margins, 44% EBITDAs. I mean, those are binary software style margins.
Yeah,
and so, our promise to the shareholder is, our revenues might do whatever they're doing, but we're absolutely convinced that we can keep these margins in these ranges, which are very healthy. I mean, we've got a comparison with all of the other reporting peers or competitors, and nobody's near us in these margin metrics. So sooner or later, we're going to get the recognition. I mean, all of our producing clients have all had recognition in share price. I mean, Tourmaline 3 years ago was $7. Well, it got to over 70. It's just under 70 at the moment. And Canadian Natural Resources was $11. Then it's in the 80s. So they've all seen the recognition. The services are lagging. That's normal. But I think here on out, some of us service players are doing some pretty good numbers. With ours, certainly the margins are certainly at the top.
Well,
so recognition.
Say that again, Des. I'm sorry.
Recognition for us in the services side, we feel it's about to hit.
It's coming. I agree. I think you go back a year and a half or so, and you were down around 16, 18 cents a share Canadian. Mm-hmm. Recently, you've been between 40 and 45 cents Canadian, give or take. But as you said, that still is well below your breakup value. And I do believe personally as well, and I've told people that one of my favorite themes going forward is not just old energy, but Canadian energy, because I also think, which is a subject that we'll save for another day, but I talked about it recently in my newsletter, that we are in the next few years likely to see, as the resource bull market everywhere broadens, we're likely to see the Canadian dollar back again at parity once more, if not better, compared to the US dollars. Resources become more important. So especially if you're a US investor, you've not only got a great story here of a vastly undervalued company, but if you're buying enterprise in US dollars, you might get a nice extra kicker there too. So Des, I can't congratulate you and Len enough on a great job you've done keeping enterprise alive to fight another day, and now being a big player, even if still somewhat undiscovered and unappreciated, but I think that's going to change as well. So great job. Keep up the good work, and I'll look forward to future updates from you.
Well, Chris, thanks for the good words. Appreciate it a lot.
Anytime. Take care.
For much more of the National Investor's cutting-edge content and actionable investment opportunities, make sure to subscribe to Chris's free content at nationalinvestor.com. And don't forget to like this video and subscribe to this channel too. Thanks for tuning in, and we'll see you next time.